Hey guys, it's Nick, and I want to do a quick video about this Hertz news that they got a $1.65 billion lifeline, and the stock is up 150% or so. I'm going to tell you why you should not be buying this stock, and this deal, this lifeline, changes nothing for Hertz stockholders. It may change something for Hertz bondholders, but it changes nothing for Hertz stockholders, and I'll tell you why. So here's a look at the Hertz chart. It was $20 before the shutdown. After the bankruptcy, it went to like, I don't know, 40 or 60 cents. And then all these small guys piled in, taking it up to $6 with the hopes that Hertz is going to get bailed out, or there's going to be a turnaround, or the car business is going to turn around. But what none of these people realized here at $6 or whatever is that even at this point, even if there was a turnaround, they owed more money than they can pay off. And so the bondholders have to get paid first before any money goes to the stockholders. That's always the case in bankruptcy. And so I did a bunch of videos on that, explaining how that works and why stockholders will get nothing. Now, once that euphoria died down, you see the stock went down to like around $1, and it's been trailing around there ever since, which it shouldn't even be at $1 really. But today on this news, look at this volume, 400 million shares. It's up to $2.50 or something like that, on the hopes that this somehow changes something, or maybe there's some new crop of people that are just reading this news and don't know the reality of the situation. So they're buying this stock, one, because they think that this is going to change something, or two, that they're jumping aboard this so-called momentum play because the stock is up 100%. So they're getting in and thinking it's going back to $6 or something like that. So let's look at this news. They got a $1.65 billion financing. And what this is called debtor in possession financing. And what that means is it is a loan to the company while they're in bankruptcy, and it gets in front, it gets preference to get paid before anybody else gets paid. So if you can imagine that Hertz is giving out slices of pizza and they only have, 20 slices. Well, the first people online get their slices first, and the last people online, if there's any left, and that's the stockholders, get pizza. Now, if the bondholders are owed 25 slices of pizza, the stockholders are getting nothing. And what happens with debtor in possession, they jump in front of the bondholders. So if the bondholders are owed 25 slices of pizza and the debtor in possession is loaning out 2 slices of pizza, they get their pizza first, then the bondholders gets their pizza. And if there's not enough pizza to feed the bondholders, the shareholders get 0. And that is still the case now. Hertz owes something like $17 billion to their bondholders, and there is not enough money if they liquidate everything to pay off the bondholders. So the bondholders still will not get paid in full. They will get some portion, and the proof of that is seeing where the bonds are trading. If they were trading at par, meaning 100% of their original value, that means that the expectation is that they will get fully paid out, but they're not. They're trading at fractions. I don't even know. At one point, some of them were trading at 20 cents, 30 cents, something like that. So that is proof that there is not enough money to pay out the bondholders. If there was, then people would just buy the bonds and get paid out the full amount that is owed. But that's not the case, and that's why they are discounted. So if you're owed $1 billion on a bond, you will get paid that $1 billion if there's $1 billion to pay. So if there is $1 billion to pay, you would pay the full price, the $1 for that bond. But if you are expecting to get only 50% of that payment, that bond would be trading at 50 cents. So that's how it works. And that's why there is no money to pay the shareholders. So all this does is maybe help Hertz as a company prolong itself a little bit, or help it during bankruptcy. And it says that some of the money is going to be used to buy more cars, and some is going to be used to run the business while they go through bankruptcy court. Here it says up to $1 billion can be used to provide equity for vehicle acquisition in the US and Canada, and up to $800 million can be used for working capital and general corporate purposes. Now, for those that don't believe me or have a really short memory, or think that the stock price is proof that there's hope for the stockholders in Hertz, let's just go back just a few months to June, when the stock was at like $6, and Hertz came out with a plan to do a secondary offering while in bankruptcy, which made history because it's so ridiculous. And the judge actually, the SEC actually agreed to that at first, but the judge put the kibosh on it because it is so blatantly a ripoff of stockholders, and yet they were pushing through to do that. And Hertz itself even said they expected stockholders to lose all their money in their filing for selling more stock. So they said, hey, listen, we're going to sell more stock, and yes, we expect all the stock that we sell and the current stockholders are going to lose all their money, but if people want to be stupid and give us money, we'll take it. And so they almost got away with it. And you can get away with anything pretty much if you put the risk, or you lay out the likelihood of what's going to happen in plain sight, and you say, hey, I warned people the stock is worthless, they still decided to buy it, that's on them. And this is on you if you're buying this stock today looking that it's up 150%. So here's what the company said on their filing with the SEC. It says, although we cannot predict how our common stock will be treated under a plan, we expect that common stockholders would not receive a recovery through any plan unless the holders of more senior claims and interests, such as secured and unsecured indebtedness, which is currently trading at a significant discount, are paid in full, which would require a significant and rapid and currently unanticipated improvement in business conditions to pre-COVID-19 or close to pre-COVID-19 levels. So what they're saying is the lowest people on the totem pole in the bonds, the secured debt and unsecured debt, are not going to get paid out fully. That's why the unsecured debt is trading at a significant discount, because the odds of them getting paid out is very low. So that means that if they're not getting paid out, then the people below them, which is the common stockholders, get nothing. There's no pizza. If there's not enough pizza to go around for the unsecured debt, then there's definitely no pizza for the common stockholders. And he spelled it out here. So it's as plain as day, yet people want to believe otherwise because they want to believe hope or what they saw in some uninformed forum post or something like that, or they see that Hertz is up 90%, let me get in, everything's changed. They see the headline and don't want to dig deep into what it actually means. And the truth is, it actually means nothing for common stockholders. So don't fall into this trap, buying this just because there's a headline and this stock is up on the day. It's gonna deflate again. And when the bankruptcy court is finished, after the plan is approved, common stockholders will get zero just as before. So that's my video. If you liked it, give me a thumbs up, leave me a comment, and subscribe if you haven't done so. Thanks for watching, guys.